Welcome back. Looking good for the markets. So it's that time of the day where we get you a midday update on what's taking place in the FNO things or the FNO scheme of things. First half of trade has been strong. You have the Nifty Bank doing well. The Nifty Bank is actually leading the gains, and at the same time is the mid-cap index, which is mildly underperforming but gaining in step with all the other indices as well. About 1/3% higher as against the frontline indices, which are higher by 1/4 or 1/5%. Important to watch out for the Nifty financials because out there the open interest is higher and we have the premium higher as well, and that is important primarily because it is FinNifty options expiry today. The Nifty financials options expiry today means that you have to focus on a few stocks in the last hour of trade. What are those stocks? You focus on HDFC Bank, HDFC and ICICI Bank. Together they have over 60% weight in this index, and other significant weights are Bajaj Finance and Bajaj Finserv. Usually on Tuesdays in the second half of trade, we do see some action on these counters as well. For the Nifty itself, now that we've crossed and comfortably stayed above that 18,500 mark, that's given a fair amount of ammunition to the 18,500 put writers. We've seen almost 50 lakh puts being written on that, so that means the support has moved higher from 18,350 to around 18,450. The 18,600 put too has seen a fair amount of writing as the Nifty holds higher. So the 18,600 put for a premium of 100 odd rupees, 80 odd rupees, means that 18,500 would be an important support as well. So what's the support zone? 18,450 to 18,500, which has moved higher by about 100 points since the time we entered trade today. In terms of open interest on the call side, 18,500 call writers are now covering their positions as they're feeling the heat as the Nifty is holding above. So you have around 6 lakh shares covered. If the market holds around these levels for a more sustained period, all the other 57 lakh people who have written those calls will also have to run for cover. That would mean the market moves higher. How much higher can it move? 18,600 call writers are sitting there with a premium of almost 80 odd rupees. So 18,650 to 18,680 is where we may see some bit of congestion. So to simplify it, 18,450 is an important support, 18,650 an important resistance to watch out for.
Okay, so that's the FNO setup, and we'll take this conversation forward and speak to Sacchitanand Uttekar of Tradebulls, who's joining us now to get that technical check on the markets as well. Sacchitanand, what are the markets suggesting, the charts that is, important levels to watch now?
Well, good afternoon, and I would like to add a few pointers to Mangalam's data. So last week, we saw Nifty slipping below the 5-day exponential moving average for the first time. It breached the 18,660 mark, and post that we saw a sharp decline towards 18,370 kind of a zone. But on a closing basis, it did sustain about the 20-day exponential moving average. And right now, again, we are seeing that same phenomena. So immediate, I think the hurdle for the indices is placed somewhere close to 18,660. So probably we may see this, a move wherein the Nifty has been inching higher may continue, and still some longs can be added. The stop loss for the trade should be placed at around 18,540 from here on. When it comes to Bank Nifty, the hurdle is at around 44,000, and unless we don't see a breakout sustaining above that, we may not see fresh momentum play when it comes to Nifty Bank. So probably Nifty Bank may oscillate within this particular range of 43,800 on the lower side to 44,000. When it comes to Nifty, I think the trend is much more evident, and if you look at the momentum, that momentum play may only emerge once the breakout at 18,660 is established.
All right, we take that point. Just before we talk about stocks, just pull up the intraday chart of Dr. Lal PathLabs, because there was news at the bottom of your screen just a while ago that the Delhi government will provide 450 types of medical tests free of cost from Jan 1, and these tests will be provided at their own hospitals and healthcare centers. And that has had a negative impact, a sharply negative impact on Dr. Lal PathLabs. And that's primarily because of all the other listed diagnostic companies. Dr. Lal PathLabs has its highest exposure to the NCR, and as a result of which that stock is lower. Though even Thyrocare is currently at the low point of trade. The sharpest fall, however, has been reserved for Dr. Lal PathLabs. From 1st January, we will have 450 types of medical tests free of cost from Jan 1. Pull up the intraday chart of Metropolis Health as well. That wouldn't have fallen as much too, but still is meandering around the lows of today's trading session. The steepest fall is reserved for Dr. Lal. So That's about individual stocks. Any chartical view on Dr. Lal Pathlabs, Sachi, now that we have you with us, and other individual stocks that you have?
Mangalam, the trend has always been sideways for the last 4 months when it comes to Dr. Lal Path. But if you look at the weekly chart, here we are seeing a fresh breakdown getting established, and there's a falling three candlestick formation. Now, this is a very rare continuation pattern candlestick formation. So we don't expect an immediate uptick in this particular counter, and probably the resistance which was placed at around 2600 may shift lower towards 2440. So right now, I think the trend from a sideways zone could shape up into a bearish trend. So definitely, if someone is holding on to this particular counter, it's better to look for better levels on the lower side. We may see this particular decline getting extended to 2100. So right now, I think the trade setup is purely on the short side. 2440 could be the stop loss, and 2100 would be a good review zone from a positional basis. Now, when we look at some of the stock opportunities, we continue, with our long-short combination, since the Nifty is still trending below its 5-day exponential moving average. So we have a buy call on Bharat Forge. It has breached above its 52-week high. If you look at the weekly structure, we have a bullish pennant formation exhibiting a breakout. So we expect this particular momentum to extend towards 920. So fresh longs should be added in Bharat Forge with a stop loss at 882. And on the short side, we are looking at some distribution signs when it comes to Amar Raja batteries. If you look at the weekly scale, we saw a doji formation getting exhibited last week. It is near the 200-week exponential moving average, exhibiting a resistance at 670. We are expecting this particular decline to continue towards 640 eventually. So fresh short positions can be added in Amar Raja batteries with a stop loss at 672.
Okay, Sacchitanand, thanks a lot for joining us, taking us through your technical picks. Let's slip into a short break. We'll get you an exclusive conversation with Fertilizer Secretary Arun Singhal on the government's fertilizer subsidy expenditure and a lot more. Stay tuned.